Hey everyone, welcome back to Business Brain Rot, where we break down the latest in investing to help you make smarter money moves. Today, we're diving into Morningstar's latest stock market outlook for September 2025. If you're wondering where the opportunities are hiding in this market, especially with small caps making waves, stick around. We'll cover the key insights, undervalued sectors, and what it all means for your portfolio. Let's jump in. First off, let's set the stage with the overall market performance. As of August 29, 2025, the U.S. equity market is trading right around fair value. The Morningstar U.S. Market Index climbed 2.15% in August, but the real story is in the underdogs. Small cap and value stocks stole the show. The Morningstar U.S. Value Index surged 5.05%, while the U.S. Small Cap Index was up 4.58%. In contrast, megacap growth stocks lagged behind, with the U.S. Growth Index only inching up 0.4%. This shift is exciting because it signals a potential rotation away from the big tech names that have dominated for so long. Now, on valuations, this is where it gets juicy for bargain hunters. Value stocks are sitting at a 3% discount to fair value, while growth stocks are at an 8% premium. Small caps? They're the steal of the show, trading at a whopping 15% discount. Large and mid caps are pretty much fair valued, so if you're looking for upside, smaller companies could be your ticket. Morningstar's data shows this clearly in their style box breakdown. Small caps have been undervalued for a while, and with the right economic tailwinds, they could keep rallying. Speaking of tailwinds, let's talk about the Fed and the economy. The Federal Reserve is gearing up for some easing. Expect a 25 basis point rate cut at their September 16th to 17th meeting, another one before year-end, and a full 100 basis points in 2026. Long-term yields, like the 10-year Treasury, are heading lower, forecasted below 4% next year and even further in 2027. On the economic front, Q2 GDP came in at a solid 3.3%, but strip away some tariff-related inventory boosts, and the underlying growth is slowing. Forecasts point to a gradual slowdown through early 2026, with the Atlanta Fed's GDP now estimate at 3% right now. Historically, small caps thrive during Fed easing, economic reacceleration, and falling rates, but timing is key, and it's not always straightforward. So, where are the investing opportunities? Morningstar points to several sectors trading at discounts, ripe for picks. Let's break them down. First, communication services undervalued by about 7%. A big player here is Alphabet, trading at a 10% discount amid antitrust worries that recently got a favorable court ruling. If you're into tech but want value, this sector could be calling your name. Next up, real estate. It popped 3.08% in August, especially after Fed Chair Powell's speech hinting at cuts. Lower rates are a boon for REITs and property plays, so keep an eye here as borrowing costs drop. Energy sector, up 3.43% last month, offers value in oil and oil services. Morningstar uses a mid-cycle oil price of $55 per barrel for West Texas Intermediate, which suggests some upside if prices hold steady or rise. And don't sleep on healthcare. It jumped 5.49% in August, but is still down 1.41% year-to-date. The value is in medical device makers, medtech, and consumables, areas facing less pressure than insurance or big pharma. On the flip side, utilities are overvalued after a big run-up, so Morningstar advises caution there. It's mostly story stocks with little real value left. Overall, the message is clear. Small caps and value plays are undervalued and could outperform if the economy cooperates with Fed easing and stable growth. But remember, this isn't financial advice. Do your own research or consult a pro. What do you think? Are you loading up on small caps or eyeing healthcare stocks? Drop your thoughts in the comments below. If you enjoyed this breakdown, hit that like button, subscribe for more market insights, and turn on notifications so you never miss an update. Check out the full Morningstar article in the description for all the details. Thanks for watching. See you in the next one.